What is going to happen to home prices in 2024? This might be a question you've asked yourself, whether you are looking to buy, looking to sell, or maybe you're a homeowner and looking to make a move. I know a lot of people have been stuck in their homes trying to upgrade or downgrade because they're stuck in such low rates. So let's look at some data. Let's look at some facts. Let's use this data and use some common sense to figure out what's going to happen to home prices in 2024, because there's a lot of noise. A lot of people talking about recession, market crash. We've been hearing this stuff for a couple of years since the pandemic. So let's just look at some facts. The Fed started raising rates March 2022. They raised rates at an unprecedented level a year and a half ago. They raised rates at an unprecedented level. They went from 0.25% here, 0.25 to 0.5, all the way up to 5.25. So what has happened to home prices from the time the Fed started raising rates? Let's take a look. The average home price, so they started raising rates March 2022. March 2022 is Q1. As you can see here, the average sale of a home in the United States was $514,000 when the Fed started to raise rates. So they start raising rates. Home values continue to go up for a couple of quarters, drop, level out, and then today, so over the last year and a half, since March 2022, since the Fed started raising rates, the average sale price went from $514,000 to today, the average home price is $513,000. Let's sink in for just 1 second. Before the Fed raised rates, the average home was $514,000. After raising rates, the fastest it's ever raised it, and the highest rates have ever been in 20 years, the average home price stayed the same. Okay, again, let that sink in. We had 7, 8%, almost 8% interest rates over the last year and a half. Okay, that was the peak. And even with 7 and 8% rates, the average home price stayed the same. That's the data. That's what the data says. So I think we have a Fed meeting coming up in about 6 days. Everyone thinks the Fed is done raising rates. We have a big jobs report that comes out tomorrow, December 8th. If you don't follow me on Instagram, follow me on Instagram, Roger Real Estate and Home Loans. I'll be posting updates on what's going on when the jobs data comes out tomorrow. It's a big report that's going to come out that's going to show if the economy is slowing. Over the past month or two, we've been seeing small signs trickling in, showing that the economy is slowing down, which is what the Fed wants. Inflation is slowly going down. Most people think the Fed is done raising rates, and there's a lot of bets being made that they're going to start cutting rates in 2024 because they've accomplished their goal. Now, let that sink in for a minute. If the Fed lowers rates from the peak 7-8% over the next year, what do you expect is going to happen to home prices? Home prices stayed the same through 7 and 8% rates. Imagine we start cutting rates to 6%, 5%, or 4% over the next 1 to 2 years. Imagine the influx of buyers. Imagine the buying power that's going to come into the market. All the people who couldn't qualify, who now qualify for a mortgage. All of the people who qualify for 500, 600,000, now they're going to qualify for 700, 800,000 with the same payment, right? So when rates go down, you can afford $100,000, $200,000 more. And what's going to start happening? You're going to see prices start getting bid up. Okay. If home prices stayed the same at 7 and 8%, you bet your ass values are going to go up. Home prices are going to go up if we cut rates into the 4 and 5%. Just use common sense. Home prices didn't move at 7 and 8%. What do you think will happen once we cut rates? And that's what everyone is expecting. As of today, December 7th, 2023, the average rate for a 30-year fixed mortgage is 7.05%. Just about a month or two ago, we were touching 8%. So because of the data coming out, because of inflation coming down, weakening economy, we've already seen rates drop from 8% to 7% in a very short time. Once we get an indication from the Fed that we're done raising rates, and once we get that first cut, you're going to see drastic drops in interest rates. Like I said today, 7.05%. Don't be surprised over the next 3 to 6 months if rates go from 7% to 6.5% to 6.25%. Okay, we could be touching a 6% mortgage over the next 6 months. Fast forward to the second half of 2024, we could have a 5 in front of your mortgage interest rate. Okay, you could be at 5.99, 5.875. And mark this video, please mark this video, save it, come back, check up on me mid 2024, late 2024, and please tell me if I'm wrong. And tell me if I'm wrong if home prices aren't going up. Another example I wanted to share with you is our company had a listing. We listed a property at $1.19 million, so just under 1.2. We ended up selling for 1.65 million. Okay, just let that sink in. 3 months ago, we were near the peak of interest rates. We were in the mid to high 7% rates, and our listing went $460,000 over asking. So not just looking at this data, but looking at our personal experience, what I'm experiencing firsthand. But you're talking about peak interest rates, and you're talking about a home selling for almost $500,000 over asking. Again, just imagine what you will see once rates drop into the 6s, low 6, and once you get a 5 in front of that rate, things are going to get really heated really, really fast. So please, if you find any value, like, subscribe. Thank you so much, and I'll see you guys on the next video.